So if everyone is ready, then we go, I think. Huh? A few words of introduction on my side before I introduce my dear co-panelist. Because indeed, we have such a topic, new technology and innovation, future markets, architecture, and AI. So what a program. Because we are in this audience of knowledgeable people, I would say that as market infrastructure, we have gone through major transformation over the last decades. One of the biggest being the shift from physical securities to digital securities, of course. But now, with technologies like AI, DLT, cloud-based architecture, I would say, it is largely or commonly accepted that kind of a transition will happen, and that we are given the possibility to embrace another significant shift. No doubt. How, when, what does it take? This is what we're going to discuss today. So it's a great opportunity to hear industry experts sharing their views and on the ultimate goals and prerequisites of such a transition. And if I may, such an adventure. Talking about CSD specifically, our mission has always been to provide secure, scalable, and resilient platforms that all markets can trust. And of course, for tomorrow, we want to ensure that DLT, AI, cloud services will help even improve the market conditions. But is it enough? Is it enough to improve the efficiency of what we do to trigger this kind of a transition? Can we do more? Can we grow the pie? Can we help our clients improve their operational models and even improve the user experience on their side as well? So today, the debate will be about the how. What are the challenges on the regulatory works, on the technical readiness? We speak a lot about interoperability, scalability, liquidity, collateral eligibility, all these technical challenges, but also, and probably above all, client readiness. Are they ready? Do they want this transition? What's in it for them? So, my dear colleagues accepted to meet the challenge. So in a minute, we will start engaging in conversation about all this. I have all the details because I need a few reminders. So, are you sitting in the right order? Almost. Yeah, exactly in the right order. Thank you. So, Jens Harmeister, Clearstream, New Digital Markets, Data and Issuer Solution Director. Holger Neuhaus from the European Central Bank, in charge of market innovation and integration. David Nunes, sorry for the pronunciation, head of SIX Digital Exchange. Alan Philpott, Chief Product Officer at Delta Capita. And Andrzej Dusilek, the Chief Executive Officer of the Czech CSD. You can applaud them while I'm looking for my questions. It will give them some encouragement, and me too. Here we are. So while answering the questions, don't hesitate to promote your recent, I would say, highlights. All of them, and of us, obviously, Euroclear is very active on that field, have recent deliveries. Some of us issued significant amounts of digital native notes and assets, so I think also an opportunity for you all to promote and say a few words about the initiatives and not only answer the questions, obviously. But I will start with you, David, about a bit of the context. In what market segments do you think that technologies such as, again, DLT, cloud-based platforms and artificial intelligence will have the greater impact? And also, which technology gets the better adoption, which is something we rarely discuss, I would say.
So do you want me to start with a bit of a background about SDX, or go straight into the question?
Okay, please, indeed.
So I'll start with that, and as I'm talking about something that I know really well, I'll think about the question. SIX Digital Exchange is a wholly owned business of SIX Group. We were the first FMI to be granted a license to operate a CSD and an exchange based on blockchain technology, and that was back in 2021. We're also the first FMI to issue a digital bond on blockchain shortly thereafter. We have now issued around 1.5 billion Swiss francs worth of bonds on SDX. And every step of the way, each of these bond issuances has been a learning experience, and we've sort of been filling in the blanks when it comes to how we can achieve essentially equivalence, first of all, to the traditional infrastructure, with one of the most significant components that has been missing until relatively recently, a riskless settlement asset on-chain to be able to actually settle security transactions on the blockchain that we operate. So a wholesale CBDC, after quite a significant amount of debate and experimentation, it turned out that that was the most effective way for us to proceed with that. And as of December of last year, we've been settling transactions on SDX in wholesale CBDC in conjunction with the Swiss National Bank. Now we've settled something in the region of around 800 million francs worth of bonds on CBDC, and in June of last year, or this year, sorry, it feels like a very long year so far. June of this year, the Swiss National Bank announced that it would prolong the support on SDX of their wholesale CBDC for at least another 2 years, expand the scope, and essentially head towards on a trajectory towards providing initially an MVP and then onto production. So. That's where we are from an SDX perspective. We also, as Six Group, and I sit on the board of AsianX, which is the joint venture in Singapore, to stand up a crypto derivatives and cash exchange, institutional grade exchange, and securities tokens exchange, which is also a really interesting insight into the other aspect of all of this. So we're talking on SDX about legally identical assets to traditional infrastructure, so digital securities, which are exactly the same, and interoperate very effectively with the traditional infrastructure as well. But in AsianX, we're talking about the whole cryptoverse, which is a different sort of deployment of technology, and specifically with tokens that exist natively on public chains, and how you actually incorporate that into the institutional ecosystem in a safe and an effective fashion. So. Could you repeat your question?
In what market segments do you think that technologies such as DLT, AI, and so on will have the greater impact? Which technology gets the best adoption?
I think of these technologies as not being an either-or, like you sort of select, I know what we'll do, we'll deploy AI and we'll ignore DLT, or I'll deploy DLT and ignore AI. I think they're part of a technology stack. And in the same way that we've seen the evolution of technology that ultimately ended with Web 1.0, then Web 2.0, we're going to see a new sort of set, an additional stack, the additional layers to the stack. So we don't all now operate our own fiber or copper infrastructure from a network perspective, and increasingly institutions, organizations don't operate their own servers for database and compute. They use cloud for that. So it feels like you have these sort of layers, network layer, hardware layer. I think that DLT will provide an additional layer, a settlement layer for the transfer of value, and I think that AI will be a layer on top of that, which is how an awful lot of interactions with that DLT layer will occur. And I think some interesting glimpses into that we're beginning to see now with the intersection between blockchain and AI. And I think 2 weeks ago now, Coinbase announced a new version of their wallet with extensions which allows AI agents to actually conduct transactions using cryptocurrencies via that wallet. So although an AI can't currently open a bank account, it can hold a wallet which you can then fill up with crypto and actually have that then conduct transactions. I think it's a very exciting area, and one that I think will take a long time, and our experience of SDX has indicated just how long it can take for that to be sort of incorporated effectively and safely into the fully regulated ecosystem. But I would suggest that given the change of regime that's happening in the US, which I think is a big thing that you cannot ignore in the industry that we're involved in, that what we thought perhaps would take a little longer, I think there's going to be that. I think the Trump administration and its huge pro-crypto stance will be an accelerant when it comes to sort of moving faster in this particular space.
Thank you, David. Alan, maybe would you like to complete David's view and also maybe focus on the applications and features that would motivate clients to transition?
Yeah, sure. So, I mean, just to add to that, I think there's clearly a lot of research and learning going on what's possible. I think where it's applied and what I'm seeing, and just a bit of background, I guess, just quickly on MAC or Delta Capita. So I'll hopefully use less time. So so personally about me, I've been in the industry 30 years. I've been a participant of market infrastructures for about 24 of those 30 years, and I spent the last 6 years exploring the use of DLT specifically. So Delta Capita, we are a technology consulting solutions company, and we've developed the MAC solution that we are obviously here today about, which is around how can you adopt the technology, how can you apply it in existing markets, how can it help people and enable them to adopt and accelerate, as well as looking at new market opportunities. So we're focused on 2 areas. Where we see adoption really occurring at the minute, and some of the things I'm working on is in a couple of fields I would call out, and some of the panel are clearly looking at this as well, is asset tokenization. And so we've heard a lot today already about there's an urgency. The industry is constrained by the inefficiencies, the complexities, and now you've got a 3-year market change project on top of that. But there is untapped value in collateral, and I think the technology should and is being used and explored to how you can start to monetize that and explore usage of collateral that isn't used today. And then the other element is, and we're doing a lot of work in this area, is, and I heard a lot about retail earlier, about how do we untap all of the savings, and we're exploring product development and launches of retail structured products aimed at that segment of the market, using the new technologies, because you don't need the layers of today in order to do those type of products. They're short-term in nature, they're easy to put on a blockchain, they're easy to code around the smart contracts, and you can deliver that type of product much more efficiently and a much reduced cost to a segment of the market that don't trade products today because they're cost prohibitive. So some areas where we see being applied.
Thank you. Holger, the ECB has been driving a very ambitious program, trials, let's say, wave 1, wave 2. Wave 2 is about to be closed. Would you like to answer the same question with your own lens?
Yes, I mean the ECB driving, yes, but actually it's actually together with the market from the start. So because 2 years ago we actually had, or 2.5 years ago, we actually had a large outreach on the topic there. It is on the blockchain, the distributed ledger technology. And then actually together in a workshop with market participants, we actually, I mean, there was a clear conclusion also of the market. I mean, please, we actually want to advance on this, and there needs to be a cooperation between the public and the private sector. So which led us to announce then in April 2023 that we would do trial and experiments, which we are currently doing. So they come after half a year, they are coming to a close now. And that has been, I mean, already now, I would say, actually very, very successful. So we have received 60 successful applications from 9 countries. So there has been a strong demand, and only those, and it's a revealing of demand, because the deadlines, I mean, everybody before asked us, be quick. Then when we were quick, it was tough to apply for our deadlines. But the issue is that nobody who was not ready, didn't have their own or actually a contact to a DLT provider or had made other progress, could not participate. So that was a lot. And it's, I mean, currently, because well, our trials come to an end now. I mean, I think we are just about par, or just this week I think we are slightly above with the actual value settled compared to the Swiss. But also with the participation and also with the wider scope, because we do securities, collateral, but also payments, automated payments in other cases. So it's a very broad set that we are doing, and it has been very, very successful, irrespective of the numbers. Now, what is I mean, which asset would it best help? So, I mean, there's no obvious answer to this, because of course the quick and easy answer is, well, I mean, there are those assets that at this moment, I mean, can be best served, or that are underserved at this moment, so which are niche products, etc. But I'm not convinced about this, because when we look at the use cases, what is visible with the amount settled, that's the securities part, because the payments we did not allow at this moment, so they were all experiments. But when we look at that, it's the big scope, because the market participants, what they are really doing is not just to do some settlement of transactions. It's they look at the full life cycle of things, and that's what we have to accommodate, and then even connect them. And I can have more advantages. I mean, some more specific cases later. But it's. I just recently heard then actually a podcast of an issuer, for example, who took part in our operations. And the head of this corporate issuer, I mean, they were very happy that this was going on, that they had a digital bond finally. But when they described the steps, so everything was digital with the issuance, etc. But the sale itself, they had to do the paperwork, they had to do the signatures and trade that. So if you just do one asset, no matter how much efficiency you gain, that's not it. So that's why we also tested, market participants are testing automatically and linked payments. So you have like DVPVP, you use commercial bank money in between, not just central bank money, which we are doing. So all this has to be seamless. So it has to be a much more profound thing. We had just a workshop on B2B issues. So the travel, there was, for example, the travel industry. They already have a global DLT. They look for cash. So it's not just one. It has to be an ecosystem that is being developed.
Definitely, and it makes the transition with the next question, and maybe for you, Jens. Regarding digital assets and DLT market organization, so we switch to DLT specifically. Do you think that this technology will scale up? And listening to your colleagues, we see that we are in now. Right? It's not something that is questioned anymore. But do you think that these technologies will scale up? And what would support the transition? What do we need to do as an ecosystem, to come back to what Olga said, to accelerate or secure the way we transition?
First of all, probably let me pick up on some of the initiatives we are running, which nicely fit to what Holger alluded to earlier. So obviously the ECB trials are one of the key activities we are currently driving out of Clearstream together with a broad community of market participants. We have chosen a broad setup in a way, so all our 3 CSDs are connected to our D7 DLT infrastructure. So Clearstream Banking Frankfurt, Clearstream Banking Luxembourg, and Lux CSD. We are connecting to all the 3 possibilities which the Eurosystem is providing. So the German trigger solution, the Italian bridge solution, and the French DL3S solution. And we have successfully executed, I would say, use cases and transactions with all of the connectivities, with all of the CSDs in the range of obviously primary issuance and placement, initial settlement, then secondary markets up to securities financing and repos, and there's more to come. So we have executed 9 use cases, and we are not finished yet. So we'll probably use the infrastructure till the very last day. Let's wait and see. There is some more in the preparation, and probably this then later will lead me to answering a bit the DLT question. On the other hand, let me point out that D7 is not DLT only. I keep saying currently it's a hybrid infrastructure, and you can think of it a bit like as a kind of plug-in hybrid car. So we've heard about paintings and unemployment rates earlier today. So let me throw another kind of picture in the mix here. So we have on the one hand side D7, which is digitizing securities by using a combination of new technology stacks with its multi-party workflows, which is microservices and event-driven architectures. We use it to digitize structured products and debt capital market products, mainly in the German market. And this is, so to say, our highly efficient combustion engine to stay in the analogy. And then we have the D7 DLT, which is kind of tokenizing securities and using token smart contracts and the like to basically mimic the same thing, because finally, whenever we talk about digitization, in our view, it is to turn the security into smart digital object. And whether you use different new technologies or use DLT, finally, it should come out the same to model the life cycle front to back from a securities point of view. And probably this leads me to the. Oh, let me add to David's points earlier. I would very much agree that it is not about one tech stack. It is not about DLT only. It is not about AI. It is not about cloud. So when we design technology, it is always a toolbox we are using of new technologies. And the other thing we are doing, we are designing it backwards from the client and from market effects. So how much value can we create for the market and then back to the technological solution and not the other way around, meaning having a new technology like DLT and what can the right use case be? It's just the other way around. How can we increase market efficiency? How can we enable market growth and then design back to the right combination of technologies? This is why I believe that we are still early stage in DLT. For me, and I mean, you can use a lot of different hurdles which needs to be overcome, be it the cash leg and whatnot. Let me pick out three things. One is, and standardization has been mentioned earlier this morning. So we need the standardization and tax and regulatory regimes, etc. have been mentioned, but we need the standardization as well in the context of DLT. And I'd like to refer to a first attempt to standardization, which we jointly did with Euroclear and DTCC on the digital asset securities control principles, which we issued a couple of months ago, which is our, I would say, initial contribution as ICSDs to the question of standardization. The second element, I would say, is you need a strong use case. So meaning the use case needs to be strong enough in order to overcome switching costs for the market, because the market will only switch to new technologies and adapt if the gain for the market is bigger than the investment. Very simple. And probably last thing, is the mobilization of the current assets. So if we wait until all new issues have been natively issued as tokens, then probably we have to wait till eternity. So if you recall Steve Jobs, yeah, he issued his first iPod back in 2001. And what was his slogan? 1,000 songs in your pocket. And out of these 1,000 songs which were digitized, probably only a few were native digital songs. Most of it were songs on records which were digitized. And we need to mobilize the assets which we have as an industry on stock and tokenize it, because otherwise I think we'll have a hard time to really mobilize a tokenized ecosystem. I leave it there. Probably there are much more things to bring up, but this is...
But step by step we'll enrich the content, but seamless client experience, digitized end-to-end, data quality. I mean, I pick up a few things. Combination of technologies. We see that it's not an even strong use case. It's not only one strong use case, but several. So a combination of things will make the whole transformation attractive. Andrej, you are about to implement a platform in Prague, a DLT platform in Prague. What do you expect, and what is your own angle?
Okay, thank you. Well, yeah, you are right. And also Commissioner McGuinness mentioned this in the morning, that last month we were authorized as a DLT settlement system under DLT pilot regime. And yesterday we went live. I've got also some issuers. Several accounts were opened. We got demand from some fintech companies like crowdfunding platforms to be nodes of this DLT settlement system, to be participants of this system. And that's also, yeah, that's the reason why we try to do this for liquid shares, bonds, and UCITS, because we've got still, at least in the Czech Republic, so many physical paper form shares and bonds, and we'd like to change it and to also offer, let's say, other let's say fintech companies or companies which are providing financial services and not just investment firms and banks to be part of this ecosystem and of this financial market. So that's what we are trying to scale up DLT. But we have to distinguish, let's say, scale up and transition. I think that for transition you need really, real proof of added value of DLT for financial system. It's not just about the speed of settlement or, let's say, better efficiency. You need really huge game changer to invest, and for this transition, something like, interoperability without reconciliation, inclusion, as I mentioned, all these let's say intermediaries or fintech companies to that more players can be in the market, and that's something what I would expect from these, let's say, pilot projects.
Thank you, because you bring an argument that was not put on the table before: inclusion. The possibility to welcome in the post-trade ecosystem new players that are not eligible to a CSD today. So that's a very strong argument as considering capital markets as a whole and not only the ecosystem that we have today strictly. Thank you for that. So maybe one anecdote before we take the last questions, because yesterday evening after dinner, before closing the day, I went to ChatGPT to ask the question. In case we forgot something essential during the prep call, I asked the question 2 times: will AI solve the main post-trade issues? And then will DLT solve the main post-trade issues? And actually, the ChatGPT listed a series of things, more or less what we discussed. So, okay, we are right, and ChatGPT is right. When it's technical, as usual, it's right. But what it did not address, indeed, is the how, and the fact that not only AI or DLT or cloud architecture will solve it all. The answer was indeed that the combination of things will help, but nothing about the how. And I think you collectively address, little by little, step by step, the different things that we need to implement, think, regulate, design to make the thing an entire end-to-end benefit and not only a technical transition. And it makes maybe the links with my last question, because we have a lot of questions from the room. So if you agree, I think we will try to finish earlier to make sure that we can take some questions and be able to pass messages while we answer the questions. But the one I like is interoperability, standardization, and digital asset liquidity won't come without a strong market collaboration. Where should we start?
Yeah, I would say let's work with what we have. And in my view, and Holger is a bit underplaying his cards, because the ECB trials, in my view, was the most successful sandbox globally we've seen so far, in terms of kind of public-private partnership and in this partnership developing an ecosystem and an infrastructure. And I would suggest really to build on this together with the ECB, with the NCBs, and with the DLT operators and market participants. And for me, the next logical step is that, given that we have now this kind of ecosystem with the Eurosystem in its core, and then the kind of DLT operators around it somehow connected to this Eurosystem, to use this setup and create as a next step a kind of framework around it, like probably back at the time T2S framework has been created, together with the market, and kind of harmonize the way DLT operators act in interlinkage with the ECB. And once we have this kind of framework along technical standards, regulation, along the likes of who can participate, what products are traded or settled, what are the use cases which are supported. This, in my view, would already create a good and strong ecosystem on which the market can rely, and in my view, which would benefit ECB and market operators at the same time, so that we can take it from there towards then whatever digital capital market union or unified ledger in a next stage. But this would be my proposal here.
Alan.
Yeah, I'll challenge that a little bit, Jens, on the urgency and timeline. So just comment on, we're also, alongside obviously working with your ECSDA members and participants, we're also entering the UK sandbox. And lessons learned, I think, from what happened in the EU pilot, we're actually going with a community of issuers and investors that are telling us actually who to bring along. versus the infrastructure running the cycle. And we see, I think if you take the approach that you just mentioned, and people were referring to T2S earlier, it's been a long journey. So we actually leveraged the framework you mentioned that Clearstream Euroclear DTC released in May 24 as a reference point, versus the T2S framework that was back in the day, right? So I just think that as we look at what we're about to do in the DSS, there is much more urgency. The UK government, I think, have confirmed in the next 2 years they're going to issue a digital gilt, whatever network that ends up being in, for example. So I think there needs to be more ambition, there needs to be more speed, there needs to be more courage, because elements of the investment and the issuers will pivot to this digital market infrastructure. And it's really important that we do have regulated digital market infrastructure because they're critical, right? But they need to go faster. Because we're talking about European growth, etc. And I know I'm here as the techie saying, let's go faster, spend more money. But I just think taking that slow, methodical approach, you may miss the boat. And I think Phil referred to the boat leaving earlier this morning.
It does need to be slow, though, Alan. I mean, and I'm not saying because I'm referring back to T2S that it would probably take the same time as T2S. I think in my view, there's a call to action and a kind of need to act. You've mentioned, I mean, you can mention the Draghi report, or you can mention the latest developments in the US have been mentioned. So there are a lot of triggers for us in order to probably accelerate. And still, in my view, you need this kind of ability to create a framework of trusted infrastructure to which then the market and the market participants can converge, because in my view often you have the problem that there is too much choice out there in the market, so that market participants cannot easily say, okay, if I connect to this and this infrastructure, I'm sure that I'll hooked up on this digital journey.
I would agree with that, but I also would challenge you, Jens, in terms of the most successful public-private partnership in this space, because I would clearly say that it was the Swiss National Bank and the Swiss Finanzplatz more broadly in terms of what we've achieved in Switzerland, because we actually have in production infrastructure built on blockchain technology, where transactions that occur now don't need to be orchestrated in any way, shape, or form. We don't know when issuances happen; they just happen, which is a great place to be. But I would totally agree that this requires orchestration, because you don't want to have like sort of let a million flowers bloom type thing and see everyone get a participant to choose them from a competitive perspective. It needs to be something which is orchestrated and planned, because we're talking about the migration of market infrastructure onto a new kind of infrastructure. So that's one thing which I think is critical, is orchestration. I think that interoperability with the traditional infrastructure is also vital. And you mentioned before about how it's going to be a long time before all the majority of issuances available are natively digital. So you need to have the bridge between the two. So that was something that we also identified very early on. In fact, the second bond we issued on the platform was totally interoperable. It was a dual-listed, natively digital bond that could be traded and settled on the traditional infrastructure as a result of the integration with our colleagues on the SIS side within SIX. So I think these aspects are really key. But I do think, as well as being mentioned, you need to have the compelling value proposition as to why you're doing this at all. And I see that now we're in a position at SDX where we're providing functionality which is superior to the traditional infrastructure, and that would be things like smart variable cash flow functionality, where you can use a smart contract to actually bring in from the outside market data feeds that determine how payouts then occur. So whether that's something as simple as a Sauron bond, or something more complex like a green bond that has market data feeds that determine ultimately the payout, or fractionalization, which is something else that we're also building in conjunction with our partners, or collateral mobility. And so these are things that are intrinsic to the technology, which together I think represent where the sort of the overall benefits are. The sort of the superior single use case I don't think exists within the traditional infrastructure at the moment. I see that as what I see happening in the crypto native space is examples of what you could do ultimately within traditional infrastructure, and that's things like the extraordinary low friction and instantaneity, the mobility of collateral. So we see on our exchange in Singapore that our market participants, the market makers, they're moving their capital around multiple times, up to 10 times a day across exchanges, because they can instantaneously address margin calls, post additional variation margin, and so on. And that's something you simply cannot do with a traditional infrastructure. And if we can end up in a situation where we can mobilize traditional assets in that particular way in the traditional infrastructure without any risk being associated with that, then I think that is an example where you have a totally unique USP that comes with the infrastructure. But the step-by-step issue is it is step-by-step. We can't just jump forwards into that world. There's regulation, there's infrastructure that needs to be built out, there's networks that need to be built, and so on and so forth.
David, are you basically saying that many investors realize the possibility of instant mobilization, meaning intraday collateral, or even instant collateral, intraday instant settlement? This factor of speed and instantaneity, is it something that investors for sure value, but are they aware? And what do you all think about that?
What you'll see is as a result of the fact that, so Bitcoin, Ethereum, the blockchain native tokens are going to be increasingly adopted as an asset class. And associated with that activity, you'll have traditional market participants realizing how you interact with those ecosystems and taking advantage of the benefits that come with that blockchain native technology. And you'll see things like collateral mobilization being something which is more fully, with the awareness of that, reaches a broader and broader audience, and therefore the demand for that in the traditional ecosystem, I think, will also come in over time. But it's happening today, and we're seeing the likes of, that's what's driving BlackRock and Fidelity and Franklin Templeton to issue money market funds, for instance, that provide yielding collateral. So not only do you have something which is instantaneously mobilizable and with really low friction, but you also have something that actually generates yield off the back of it as well. So again, sort of USPs that don't exist in traditional infrastructure. So you'll see a sort of a world over there which gives you a glimpse of what we could do over here. We can do it over here in a way which I think which will require time and effort, coordination, and so on and so forth. But I think you'll see more and more experience of the sort of crypto native world being part and parcel of the experience that the institutional players also are participating in.
Thank you. Maybe before you take the floor next, but Holger, I would like to hear you indeed again back to standardization and cash and assets fungibility, but also to liaise with David on the other benefits such as transparency. We didn't address the transparency capabilities coming with those technologies and the data quality that is linked with that all. So how would you complement that?
Yeah, actually, David made my job easier because, I mean, several cases he already mentioned, like where complex data flows, for example, have to be mentioned, like the green bond, where you have live view of how are the proceeds used and does the issuer meet the ESG targets, and then you can adjust the coupon then. So that's one example, and actually there are quite some efficiency gains, I believe, with current bonds and coupon dividend payments, etc., where some information has to be copied in many places, just among some of them. So that is all needed. And actually there, I think also there, of course, standardization is needed for many things. And I mean, is it urgent or not? Well, I think one has to gain, of course, some experience with it, but it cannot be too early to do that. So basically, if you follow the crowd, well, you never see of who's in front, and even less so of what they are doing. And then it might be too late there. And I would be a bad head of innovation if that would be my personal ambition, but it's also not, I mean, in my job description. So that's something where I believe that actually we have to get going. On our side, for the market, as I said before, I mean, it's a wide ecosystem in the financial sector that has to be served, and that has to be served seamlessly. So our considerations then are also of what do we do. So the one thing is, again, of course, it's clear. I mean, we have heard also the calls from the industry of keeping the momentum. So we are looking into what are the next practical steps that we can do. But we also heard from the industry, like, please give us your ideas of how can the long term look like, so that we can focus our investments and are not spreading out too much. So that's the considerations that we are doing. If you have not done so, of course, I really suggest to read the speech of my board member from 7 October, I think it was. It's actually on the topic, but it's not even in the title. It's called the Digital Capital Markets Union. So where he describes the possibility of a long-term view where to be very efficient, for example, securities, commercial bank money, central bank money can be on one platform, which would make actually this one database that the distributed ledger technology is about be very efficient. Of course, it would not be in some island on its own with no connections. It would have to be interoperable then with other countries, with other ledgers. I mean, what I mentioned before, the travel industry, they still look for the cash. So it has to be connected. So those standards must be met. That's the work to do. So we are looking into, like, I mean, that's not something one implements quickly. And everybody, I think, who is there at this moment is on the early adopting side. So there was also the question on the investors, do they see, and the issuers, do they see something in the benefits? Yeah, they see them not always in the pricing now, but they see that more.
Not yet.
Yeah, not yet. I mean, but of course, and also on our side, and there one needs adoption. So we are of course clear. We need to review our eligibility for the collateral, the eligibility rules, and make the due diligence so that we can see of what is eligible and what not. So whereas changes to the framework may be necessary. But of course, that's on our radar. But one has to start now so that the ecosystem gets more efficient. And that is where we will do that now and actually leveraging on, and I'm not going into a race of who is now by X billion or X million, something larger or smaller. It's more the issue of using the momentum that we have and actually
use cases.
do that, yes.
Yeah. Not only bigger. André, do you would like to add something while maybe we can have the questions on the screen, because I don't see the questions anymore?
Maybe let's try the questions. I think it's very difficult to add something. Maybe just, to cooperate and to share experience,
I take the one on the bottom. If ledgers are not shared via horizontal interoperability, are we not just replicating the fragmentation we have today, but in a digital world by moving to DLT? It was partially answered, but if you want to complement.
The answer is yes.
I was about to say yes, indeed.
Confirmed.
Yes, indeed. Do we want to say more about what drives issuers to choose to issue digital securities instead of dematerialized securities? Is there a real investor custodian issuer appetite? So we addressed, I try to go directly to the answer. We addressed removal of reconciliations. So it's simpler and probably then safer, less mistakes. So less reconciliation, more transparency, it's faster. What else can we say to issuers? Because most of the use cases we mentioned were linked and perceived by the investors more than the issuers. What else can we say?
So I have so there's some unique functionality that we provide.
Yep.
So I think the smart variable cash flow functionality is something which exists on the digital side that doesn't exist on the traditional side. That's not a specific. That can be achieved again. I think most of the use cases that we talk about can be achieved with traditional technology. It's just I think it's worth noting that DLT sort of encapsulates a vast number of different bits of functionality within the same technology. So we can do smart variable cash flows as something which is sort of makes the digital version superior to the traditional bond. We also have the ability to do instant DVP. So as soon as the issuer carries out the issuance, they immediately take receipt of the funds.
Yep.
So that's something which, again, instead of having to wait that time period, that is something which is considered to be beneficial. I think also for the smart variable cash flow functionality, again, you can do that manually, or you can automate it. And manually at the moment means that I know that a lot of payment banks currently actually call up the issuer and ask how much they intend to pay out in the coupon, which seems to me to be an extraordinary situation. And clearly having that automated through a smart contract makes a vast amount of sense.
True. If I may give an answer myself, because I'm directly involved at Euroclear, I would say that for the early adopters, the issuers who choose to be with us all from the beginning and test those technologies with us, I would say it's also a mindset, it's also a courage, it's also being part of the game. Some of them were brave enough to say, I don't know the benefits yet, I'm not sure I will issue cheaper and reach out to enough liquidity, but I want to be I want to be on the playing field, because my strong intuition, as all of us I would say, my strong intuition is that it will go somewhere, but without the ecosystem playing at a certain level, like giant companies playing together to see what it brings, it won't happen. And the earliest adopters or the early adopters were in that kind of approach where, not knowing exactly what to get out of it, they decided to go and test and see.
Yeah, if I may add to your good points, Isabel. In my view, if you look at D7 again, I didn't mention it. If you look at the traditional issuance, which we have speeded up, like for structured products from 3 days to, as of now this Monday, down to a single-digit number of seconds per issuance, and this kind of automation of not only auto issuance, but as well auto redemption, auto cancellation reruns, auto knockouts, etc. So this is all kind of modeled, not as smart contract, but with new technologies. Then the issuers see a benefit because they can develop their product mark to market and issue it. They move to same day issuance, which is a kind of measurable benefit for them as well. And probably if you look at some of the DLT issuers, I would very much agree that a lot of issuers are trying things out, and in some markets it is a bit of, if I may say so, a bit of CSD issuance bashing, sorry, where people believe that DLT can erase the role of the CSD, which I fundamentally disagree with. I believe that in DLT ecosystem the roles still exist. Value might be distributed in a different way, but I think there is no DLT setup without the kind of neutral and trusted third party in the room somewhere. So this is, I think, some motivation of certain market participants, and I believe the real motivation should be how we can take the infrastructure to a digital security services infrastructure in a sound and safe and scalable way and manner, and not focus on disintermediation of certain market participants here.
Anything else? Last messages?
Yeah, I mean, just for me, I'd echo what Jens said, which I agree. When we look at the use of the DLT network, it's going to have a regulated market infrastructure playing a role. Right? The markets are not going to change the direction of travel over the last decades just because we've got different technologies. But I would say that the incumbents, and they're all in the room, I just echo that what I said earlier, is that there is an opportunity to create growth. There is an opportunity to create a digital network that will coexist with existing infrastructures, but it has to be faster. And maybe it takes someone other than the incumbents, challengers, for example, that come into the space to speed that up. I just think it needs something.
Thank you. Words of conclusion. I would say, maybe I hope that you are all convinced that we, the companies we represent today, are all committed to supporting the digital transformation. And if you capture what my colleague said, probably by helping our clients to design or imagine their future operating model and how, or the kind of new business this transformation will unlock. And I think taking the client's angle, as usual, it works, but taking the client's angle is a very good manner to try to define how we will transition, because without a strong appetite and without clarity on the benefits and hurdles, it will be difficult to accelerate. So main message for you all, you see this commitment, you see the client angle, and I know that in the room there are many of you who are in this mindset, so welcome into the collective discussions. I would say probably if in a few days from now we question ChatGPT, the question I should not have typed, will AI or will DLT help manage the post-trade issue, but how? And I'm sure that in a few days or few weeks' time we will see some, hints and words about how we can manage the transition in a safer, faster and simpler way. Thank you all.